Have you ever imagined what would happen if the world owed more money than it could ever repay? Think about this. Every country, company, and family stacked together, buried under a mountain of debt so huge that it could shake the global economy. Welcome to the story of the global debt bomb, a ticking financial time bomb that could change how we live, work, and spend. Is the world heading toward an economic collapse? Or can we still escape the explosion? Stay tuned, because by the end of this video, you'll understand exactly what's happening, what it means for you, and what the future might look like. Let's start simple. Global debt means the total amount of money owed by all governments, companies, and people across the world. That includes everything: government loans, corporate bonds, bank borrowings, mortgages, and personal loans. Economists usually compare this debt to the world's total economic output. That's called the debt-to-GDP ratio. If this ratio gets too high, it means debt is growing faster than the economy can handle, and that's where the danger begins. When people talk about a debt bomb, they mean a situation where global debt gets so high that even small shocks, like rising interest rates or slowing growth, can set off a financial chain reaction. Here's where it gets shocking. According to major reports from the IMF and UN, total global debt has crossed 300 trillion. Yes, that's 300 trillion with a T. To give you perspective, that's more than 3 times the total value of everything produced in the world in 1 year. In 2024 alone, global public debt reached around $102 trillion, and it's still climbing. Why is this dangerous? Because most of this debt has to be refinanced, meaning old loans are constantly replaced with new ones. If interest rates stay high, countries and businesses will struggle just to pay the interest. It's like paying credit card bills using another credit card. Eventually, something breaks. Debt isn't the same everywhere. Developed countries like the US, Japan, and many in Europe hold the biggest chunk. They can borrow more because investors trust them. Emerging economies like those in Africa, Asia, and Latin America are now borrowing faster than ever, and often in foreign currencies. Corporations also owe trillions through corporate bonds and loans. And households, us, are buried in mortgages, student loans, and credit cards. The scary part? Many developing countries owe money in dollars, so when their currencies fall, paying that debt becomes nearly impossible. That's how debt turns into a debt crisis fast. So what makes this debt bomb dangerous? There are 3 major threats. Interest rate shock. Central banks have raised rates to fight inflation. Higher rates mean higher debt payments. For governments, that means less money for healthcare, jobs, or education. Growth trap. High debt can slow growth. When growth slows, debt becomes even heavier compared to income. It's a vicious cycle. Market panic. If investors lose confidence in a country or company, they demand higher interest or pull their money out, which causes even more instability. All 3 together can trigger a domino effect. One country's crisis can spread to banks, markets, and then the entire global system. Now, the big question. Will the global economy actually collapse? Probably not overnight. The global financial system is massive, and central banks can still act fast to stabilize markets. But local or regional debt crises are highly likely, especially in countries with weak currencies, low growth, and high foreign debt. We could see slower growth, higher inflation, and more financial pressure over the next few years. The real danger isn't a sudden explosion, it's a slow burn that eats away at economies from the inside. If you want to stay ahead, watch these red flags. Government bond yields rising rapidly across multiple countries. Big jumps in credit spreads, the difference between safe and risky borrowing costs. Falling currencies in high-debt nations. Companies defaulting on loans or delaying payments. Debt payments eating up government budgets. If you see several of these happening together, that's a signal the pressure is building. Most governments and central banks are trying to avoid disaster by cutting unnecessary spending and focusing on growth projects. renegotiating loans with lenders, also called debt restructuring, making rules to prevent excessive borrowing, and balancing interest rates to fight inflation without crashing economies. But it's a tough job. Raise rates too much, and economies collapse. Cut rates too soon, and inflation spikes again. It's a global balancing act with no easy answers. Even though we can't control global policy, we can protect ourselves. Don't take on unnecessary debt. Keep some savings ready for emergencies. Invest in solid, low-risk assets. And most importantly, stay informed. Knowledge is your best defense in an uncertain world. To wrap it up, the global debt bomb is real. It might not explode all at once, but it's reshaping the financial landscape we live in. Governments, corporations, and people are all part of the same system, and when one piece shakes, everyone feels the tremor. If you learned something new today, don't forget to like this video, subscribe, and turn on notifications so you don't miss the next deep dive into the financial forces shaping our future. Thanks for watching, and remember, information is power, especially when the world runs on debt.